In this video, we're talking about exactly where home prices and home sales are going to go as we go into 2023. And we're also going to talk about interest rates, actually. We're going to be talking about a lot of information here in this video. Welcome back to the channel. Welcome back to another video. My name is Cody Steck. I want to be your trusted real estate resource when it comes to buying or selling real estate here in Utah. So we're going to cover a lot of information. If this is your first time here, I hope you enjoyed this video. If you're a returning viewer, you already know what this is going to be like. So I hope you enjoyed as well. All right, so let's talk a little bit about what's happening out there in the market. I'm still helping people buy and sell real estate every single day. This is something that people are going to have to do regardless of where prices are at, regardless of where interest rates are and what's happening in the market. So a couple things I want to mention is that yes, prices are coming down, interest rates are going up. It's getting more expensive to be able to go out there and purchase real estate. It's getting harder to sell real estate. But one thing that I consistently see, regardless of what the market does, is that I see a lot of people who are either on either side of the fence, right? They're saying, hey, I'm looking to buy a home or I'm looking to sell a home. And they say, well, I'm trying to buy a home, but the market's going up, so I'm just going to wait and see if prices come down. Well, then prices do start coming down and they still say the same thing. Well, I'm going to see how far they come down before I actually make a purchase, right? And it's like, okay, well, in both instances, you're still waiting. So whether the market's going up or the market's going down, you're still waiting. So you kind of got to get off the fence, make a decision and figure out what's best for you. Now, the reason why prices are coming down is obviously because of interest rates going up, and interest rates are going up because of this crazy inflation that we're seeing right now. I personally am thinking that inflation will probably last for at least another 12 months, maybe 18 months. Who knows? It could go 2 years or more, but that's something that's yet to be seen. But I do think it is going to be a relatively persistent problem that we face over the next 12 months. And so this is something you have to account for. Now, the benefit, or at least the good thing about that, is that if you do lock in a home right now and you're purchasing a property, yeah, prices might come down a little bit, but you're locking in at that interest rate. So at least you have some security there, and you can always refinance later on when when interest rates come back down. I don't expect them to stay at the levels that they're at right now. I do expect them to come back down. I think everybody's kind of expecting them to come back down in, maybe a year, maybe 2 years, maybe 3 years, and we'll come back down to a more reasonable number. I think that we could see them get down to the 5% range again, maybe even the 4% range if we're lucky and if things go well. So those are just some additional thoughts I want to kind of throw out there before we jump into this. If you're thinking about buying a home, figure out what works for your situation. It may make sense for you to purchase right now, or to be totally honest, it might not make sense for you. This is something you kind of have to just look at and determine for yourself to see if it's something that you should actually do. If it is something that you think you should do because you don't want the negative alternative of just renting a home, you want to kind of get into something and get solidified, I think that 3 to 5 years down the road, you're going to be happy that you made that decision, even in this crazy volatile market that we're seeing right now. So if you're thinking about buying, get clear on your situation, see if it makes sense. Same thing if you're selling. If you're looking at selling your home, just see if it makes sense for your individual scenario. And if that's something you need help with on either side of that, make sure to reach out to me. My information is here on the screen. I love chatting with you guys. I've helped tons of people move here in from out of the state. I've helped tons of people who already live here in Utah buy and sell real estate. I've helped hundreds of people just like yourself who are watching these YouTube videos and reach out. So go ahead and do that when you get a chance. I'd absolutely love to hear from you. All right, so let's jump into some of the meat of this video here. We're going to talk about some of these articles. Where is the housing market headed in 2023? We're going to cover some of the predictions that we're seeing here for right now. So we come down here now. Big banks and other investment firms all agree the U.S. housing market is in the middle of a major slowdown. I think that's very apparent. We're going to talk about what these different banks and investment firms think is going to happen to home prices over the next going into 2023. Morgan Stanley predicts that home prices will fall 7%. So they're at 7%. I'm not going to go into all of the details here on these. I'm just going to cover the basics of what each individual firm is saying. Goldman Sachs says, yeah, they're going to fall 5 to 10%. Moody's Analytics prediction, home prices will fall 5 to 10% and possibly even more if a recession hits. I find this kind of interesting because I'm pretty sure we're already in a recession. I think everybody's kind of feeling that things are slowing down. Things are getting way more expensive, yet inflation continues to persist, but we're kind of already in that recession. So Moody's is basically saying at least 5 to 10%, possibly more. Wells Fargo is saying home prices will fall over 5%. If we come down here, Poison Ivy Zelman prediction, I'm not sure what that is, but probably just another big bank, home prices will fall 4% in 2023 and another 5% in 2024. So they're actually expecting a 2-year decline here. Fitch Ratings says that a severe housing downturn is possible, but not yet probable. I think this is a little bit too optimistic in my perspective. Capital Economics prediction, home prices will fall 8%. Zillow prediction, slight rise in home prices in 2023. Now they have actually reversed this, and I do believe they're actually saying now that home prices are probably going to drop in 2023. But of course, Zillow is probably the most optimistic among these groups here. CoreLogic says that home prices will be up 3.2%, and Fannie Mae prediction says home price growth will moderate. So Fannie Mae didn't actually give a specific number or anything, but they are actually revising this. This is some information that's a little bit old at this point, but things are moving so quick. When I say old, I mean we're talking like a couple weeks worth of data here. So there are a couple of different companies or investment firms out there who are saying, yeah, we think home prices will actually go up, but most of them are saying that home prices will go down roughly 5 to 10%. Hey, before we continue on, I want to tell you about our newsletter. This is something we've been doing for a while now, and I want you to be a part of it. You can find information to sign up for our newsletter down in the description box below. When you sign up, you're going to get a weekly email from us recapping the videos that we released this week, as well as some other news articles that were not quite worthy of an entire video to themselves. And we're also going to include other information about what's going on in Salt Lake, what it's like to work, eat, sleep, live, and play here along the Wasatch Front. So if you want to be a part of that, make sure to go in the description box below, click that link, enter your email, and sign up. Like I said, we're not going to spam you. It's just one email a week to keep you updated on what's happening here in Utah. I'd love to see you be a part of it, and let's get back to the content. Now let's jump over here and talk a little bit about this. This article here says the housing market is backfiring on home flippers. There's a lot of home flippers who've just gotten into the market, and it says mortgage rates are now hovering around 7%, which is straining the housing affordability and pricing buyers out of the market. And meanwhile, inflation continues to pressurize labor costs, sending home building and renovations skyward. Yeah, if you want to get renovations done on your home, it is quite expensive right now. Home prices are starting to dip as sellers recalibrate their listing prices for falling demand, and even though inventory is starting to boost, it's still at very low levels. One note here, Opendoor, a company that innovated an online form of home flipping called iBuying, lost money on 42% of its transactions in August. Being able to flip a home is very difficult. It's not something that's easily done, and I think that's evidenced by that statistic there. That being said, let's jump over here. I wanted to come to the Fannie Mae website to actually get some information about what's happening in today's market right now. September 21st. Now this article here is almost a month old at this point. It's October 13th at the time I'm filming this, and it says the economic indicators continue to point to a likely recession in 2023. I think we're already there, guys. Due largely to the higher mortgage rate environment, the ESR Group lowered its forecast for single-family total home sales in 2022 and 2023 to 5.71 million and 4.98 million. This 4.98 is the number that we're really concerned with here because that's for 2023. This would represent a decline of 17% for 2022 and 12.8% for 2023. I went ahead and found their latest article that they released, which I believe, it was actually yesterday. So October 12th, they gave us an update here, and I'm just highlighting these same sections of this report that they've kind of updated. Due largely to the higher mortgage rate environment, they're now expecting home sales in 2022 and 2023 to be 5.64 million versus 4.47. So this is a lot of home sales, but they're basically saying that, hey, in 2022, we're still going to see pretty good home sales, but in 2023, we're going to drop drastically. They were thinking we'd be close to 5 million here. Now they're expecting less than 4.5 million. So that's almost 500,000 houses fewer that are going to sell in 2023, at least from their prediction. And obviously Fannie Mae is one of the biggest corporations out there for housing and loans and kind of what's going on in the market. They've got a lot of money to spend on this marketing and research. And so I think they have a pretty good analysis of what's going on in the market and what we expect to see. This would represent annual declines of 18% and 20% in 2023. Now, this is the number of home sales. This is not necessarily prices. So when they say home sales are going to drop, we're seeing home sales come down 20%. They do mention a little bit here about prices. The ESR group expects home price declines of 1.5% in 2023, which is down from its previous prediction of home price growth of 4.4% in 2023. So remember, if we come back over here to this article and come down here to the bottom, they were expecting home price growth to moderate and saying, yeah, we think that, home prices could still go up slightly. But as of their last article, they are now expecting declines of 1.5% across the board in 2023. It doesn't say specifically, but I believe this is for single family homes, and they are expecting those price drops. So some markets are going to be hit harder than others. I think that Utah is actually in a pretty good spot where they will be insulated better than a lot of other markets, just because of the demand that's out there for housing. Right now, there's so much demand for housing here in Utah. We're at a housing shortage. We have over 30,000 housing units short of the demand that is out there. So I don't see us catching up to that number anytime soon. And with all of these buyers that I've been talking to sitting on the sidelines waiting to jump in, I think that's going to actually insulate prices further and will kind of prevent that fall or soften that fall in the number of in the home price declines that we see going into 2023. All right, so let's actually take a look at what's happening in our local market. Jump over to our trusty sales data here. Now, this is the sales data for single family homes. I only wanted to include single family homes for the purpose of this video. So these numbers are going to be slightly different than some of the ones I've shared on other videos. If we look at these columns here, so we actually maxed out at a price here in May, a median sales price of $599,000 for single family homes across the board. As of right now, in October, we're sitting at a median sales price of $525,000. You can see that listing prices have actually been fairly steady, relatively speaking, since May. We're at 580, 590, 580, 585, 590. We did drop slightly in October at 569, but sales prices of what those homes are actually selling for is down substantially. Now, this is for a couple of reasons. A few really important things. When you just look at the numbers here, you might miss that. You might say, oh, wow, prices are down. That's almost, that's like 15%, right? You might say, yeah, prices are down substantially, but that's not the whole story here. The other thing you have to keep in mind is that just because the median sales prices come down, that could also be due to lower priced homes being the ones that are actually selling. If a lot of those higher priced homes are not selling, that's going to skew those numbers, right? So as obviously mortgage rates get more expensive and housing payments get more expensive, there's less people willing to purchase at those higher amounts. So if your budget was $1 million, maybe it's now only 900 or 800, right? And that's going to overall bring down the price of the actual homes that are selling. So this is on a median basis, not an average. So that will kind of come into play there as well. But you do have to kind of take that into consideration for these numbers here. So we were at 599, we're now at 525. If you looked at that straight across the board, I think that's like roughly 15%, give or take, for that sales difference there. Now, that's not always just because sales prices have dropped, but it could also be because of what I just described. The other thing I want to mention here is that sellers are oftentimes being too late to the game in order to drop prices, right? If we come back here, sales prices, listing prices are actually at $569,000, which is where we were at, back between April and May, right? That hasn't really adjusted. Despite sales prices actually coming down substantially, sellers are still overpricing their home. Now, the reason for this is that when you're looking at the data of selling a home, you're typically looking at what sales have happened in your neighborhood over the last 1, 2, 3, maybe 4 months. The problem with that is that home prices were obviously much higher back then, and so you think you can get more for your home when in reality you probably can't. If you're looking at data from, let's say, 3 months ago, you might be thinking, home prices were $562 in July. That's what my home should be worth. Well, not exactly, right? Because the market is declining at this point in time. So you should actually be lower than that rather than this number being 569, which is kind of in line with this one here. You should be lower, probably closer to like 550, maybe even like 540 or 530 to be much more realistic. So as a seller, of course, you can shoot for the moon and try to maximize the price that you get for your home. I think every seller wants to do that. However, if you're kind of in a hurry and you need to sell your home and you want to be realistic about it, I would recommend looking at this information here and really seeing where sales prices are at, and then trying to sell your home based off of that analysis there. The other thing I want to mention is just home sales, right? We talked a lot about prices here. The last thing I want to talk about is home sales and what's happening with that. So here over the past couple of months, July 2022, we had 2,400 home home sales. That's really low, guys. August of 2022, we're at 2,700. September, we're at 2,400. So let's take an average there and say we're at 2,500 for the last 3 months. Well, that's pretty low. If we go back to summer of last year, we were about 3,300, 34, 33. We were much higher than that. That's actually almost 40% higher in the same time last year. If we go back to 2020, it was even higher. We're closer to 4,000 home sales happening in July, August, and September. There's a lot of people out there purchasing homes, and also a lot of people selling. And even if we go back to 2019, kind of before this whole pandemic, inflation, fiasco kind of started, coming back to this data here, we're still at 3,800, and 3,155. So sales are down substantially here over the past couple months. I do expect that to continue. We're down 30, 40%, depending on what type of data you look at. And, these other statistics are saying, hey, we think home sales will actually drop. I think Fannie Mae, what did we say? It was like close to 20%. Yeah, 18% in 2022 and 20% here in 2023. So sales have actually dropped even more substantially than what Fannie Mae is predicting here. I do think that will continue to be the trend, but I do think we will kind of settle into some sort of a normal over the next 6 to 9 months. I do think that prices will kind of stabilize. I think that interest rates will kind of stabilize, and we kind of just have to let things play out at that point in time. So the other thing that I should mention, I know this video is getting long. If you're still with me, thank you so much for watching. The other thing I do want to mention is just kind of the difference in price versus interest rate. If you're going out there and purchasing a home for cash, of course, the interest rate is not going to affect you, and you want to get the lowest price possible. If you're going out there and you're purchasing with a loan, even though you may get a lower price on a home, let's say you get 5% lower on the purchase price, right? Instead of paying $500,000, you get the house for $475,000. That, although you are saving that $25,000 off the home, you may end up paying more with the interest rate being higher. So interest rates are roughly about 7% right now, which is pretty crazy. I do think they'll continue to push up. We just got inflation data today, and I do think that we will see interest rates even climb up a little bit higher, closer to 7.25, maybe even 7.5%. And so because of that, you're going to pay even more towards interest rather than paying down the principal on your loan. So you're saving money on the price, but you might end up still paying the same or more if interest rates don't come down. So locking in that low interest rate is something that's really critical. With all that being said, guys, thanks so much for watching. I know this is a long video. If you're thinking about buying or selling real estate here in Utah over the next little while, whether it's in a couple months or in maybe 12 months, 18 months, whenever it is, I'd love to help you. My information's here on the screen, and you can also find information in the description box below. So reach out to me. I love hearing from you guys. And with all that being said, we'll catch you guys in the next one.